When will we stop rallying on the same old information? When will we stop being so greedy, start being a little more cautious? It's hard to tell because we keep getting such a good backdrop. The kind of backdrop that encourages investors to keep taking risks. Maybe too much risk. Even with today's pullback, Dow slipping 133 points, S&P backsliding 0.29%, NASDAQ losing 0.27%. The markets had a remarkable run this week. And what a week. We almost went to war, and then we didn't go to war. We almost didn't get a trade deal, and now we know it's coming next Wednesday. Then this morning, we were worried that the Labor Department's non-farm payroll report might come in too hot. If employment's too strong, that might wake up the Fed and force them to start publicly mouthing off about inflation. We got a bunch of Fed governors speaking next week, and that could have gotten real ugly. But what actually did we get? Well, how about a Goldilocks jobs number? One that was not too hot, one that was not too cold. You get that. And I've got to tell you, we created good jobs, but we had sub 3% wage gains, so the Fed should not be worried. It could have been a lot worse, especially since some of the shortfall related to a company's specific problems at Boeing, which just now said that the former CEO is not going to get severance. All right, the labor report was still one more reason to buy stocks here, and that's what happened this morning, before even the most raging bulls either ran out of capital or just got bored with endlessly buying the same old stuff or nothing new, and that caused the decline. Now, look, get this, though. The early spurt briefly allowed us to cross Dow 29,000. I know, not an important round number. I didn't see many Dow 29,000 hats on the floor of the exchange, although there were a couple. But it hammered home to people that this rally is increasingly about momentum, about movement, not about fundamentals. So I'm actually glad we got a pullback today, if only because it could help buffer the market against potentially sharper declines if the earnings start to disappoint that we hear next week. I hate it when stocks run going into earnings season. Any week this year will actually give the bulls a better setup. But next week is indeed when the rubber hits the road. Earnings season gets going, and we're going to find out whether the fundamentals can actually justify this market's magnificent move higher. With that in mind, what's in our game plan for this crucial first week?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.